As a financial services professional, I speak to my clients and potential clients about the importance of insurance, investment, and retirement planning. And one product in particular that I've become fond of is permanent life insurance, also referred to as whole life insurance. And what that is life insurance for your whole life. We all know that life insurance pays out a sum of money upon the death of someone. Because of that, a lot of people refer to it as death insurance. But I've learned a few things about it, and that's what I would like to share with you this evening, that it's a little bit more than death insurance. The first thing I've learned is about this thing called cash value. The way I explain this is to use a simple analogy. For a homeowner, they pay their mortgage, and over time, the home builds equity. In a permanent insurance policy, the person pays a premium, and over time, they accrue cash value. So essentially, it's the equity within the policy. So this cash value can be utilized for a number of things. Just to name a few, it could help to supplement your retirement income. It could be utilized for an emergency fund. But the real kicker that I've learned and become very fond of is that the cash value grows on a tax-deferred basis. I don't know about you, but I don't like paying taxes like the next person. So if I can avoid taxes at any cost, I'm all for it. But also, too, the cash value in a permanent life insurance policy, unlike an investment that rides the roller coasters of the stock market, it never decreases. So you can be assured that your cash value will be increasing 100% of the time. Pretty fascinating. Something I learned, and I definitely make sure to preach that every time I talk to someone about it. The next point I would like to speak on is why a young professional should own permanent life insurance. And this is closely resembles the cost. And we all know that the older you are, chances are you become less healthier. And you have to kind of look at this from the insurance company's point of view, in that an older, less healthier person's probability of dying is substantially higher than that of a younger, healthier person. So what does that mean for the life insurance company? If you insure older, sickly people, you're probably going to end up paying a lot of claims, and you'll be out of business before you know it. But also, too, for the young professional, you remember that cash value that I just talked about. It's a great way to save some money for the long term. The last thing I would like to mention to you is about why a parent and or grandparent should purchase a permanent life insurance policy on a child. For the parent, for example, let's say most kids go to school around 17 or 18 years old. So let's say you take out a policy on a 1-year-old. That policy has a chance to accrue cash value for 17 years. And those funds could be utilized as a great source for college funding. But also, too, that helps the parent become less reliant on that child receiving a grant, a scholarship, fellowship. And we all know the problems we have in this country with student loans. But also, too, what that policy can do for a child is to guarantee their future insurability. For example, let's say there's a family history of breast cancer and you have a little girl. Chances of her getting breast cancer are a lot higher than somebody who doesn't have a family history of that terrible illness. But by purchasing that policy on a child, you've guaranteed them for the rest of their lives. Because when you have cancer or a number of other illnesses, you become immediately uninsurable. So no company will insure you. However, if you get a job, your employer may have a group policy that allows you to do it without going through a medical exam. So other than that, you can't get insurance because you're uninsurable. From the grandparent standpoint, think about leaving a legacy and how powerful that could be, to never be forgotten, to give something to your grandkids that they will never ever forget. Because when they're of age, they're going to ask their parents, Mommy, Daddy, why did Grandma and Grandpa buy this life insurance policy on me? And they're going to tell them about all the wonderful benefits. And what that grandparent has just done is not only left a legacy, but has planted a seed for wealth creation for future generations. Now, how powerful is that? So let's recap. We've talked about the cash value. We've talked about why a young professional should own permanent life insurance. And we've talked about why a parent and or grandparent should even consider purchasing permanent life insurance. So let's say you haven't been listening to anything I've told you this evening. I'm going to sum it up for you in one statement. Cash value puts the life in life insurance. Because without it, it's just death insurance. Thank you. Madam Toastmaster.